The two people you're going to interact most with during a home purchase are your real estate agent and your lender. So I wanted to introduce you to a lender that I work with frequently, ask him some questions and figure out how he fits into the process and how we all work together. My name is Phil Wells, I'm a real estate agent here in Spokane, and this is Josh. Go ahead, I'll let you introduce yourself.
My name is Josh Taylor, and I'm a lender. I work with Paramount Residential Mortgage Group here in Spokane.
In this video we're going to look at some frequently asked questions when it comes to loans, and later on in the video we're going to look at some specific loan products too. So let's get into it. So one of the first things I hear from my clients is, what's the first step? How do I get started? Do I talk to a real estate agent first? Do I talk to a lender? What's the first step? Josh, let's get your take on it.
You don't want to start looking for a home before you know what price range to stay in, which is really what my job is. When somebody comes to me, my job is to help them understand, okay, here's your income, your assets, your credit, all that kind of stuff, and then I'm able to tell them, okay, here's the price range that you want to stay within. You don't want to look for homes that are outside your price range, and you also don't necessarily want to look for homes that are below your price range. You can, obviously, but you don't want to be outside of a price range online looking for houses that you wouldn't be able to afford. That's just a waste of time.
No, I completely agree with that. I think that really falls into sort of managing your own expectation. You can go online and put in your income and sort of get a rough estimate of how much you're going to be able to afford. But without actually speaking to a lender, you're not going to have a clear range of what you can shop in. There's no point looking at $500,000 homes to find out you qualify for a $350,000 home. That's just not managing your own expectations. You're going to end up a little bit disappointed. The second question I hear a lot is, what's pre-approval and do I need to get pre-approved?
Yeah, so the short answer is yes. You absolutely need to get pre-approved before you put an offer on a house. If you put an offer on a house and you don't have a pre-approval letter to go along with that, usually your offer won't get even considered. So what is pre-approval? Well, pre-approval is when a lender takes a look at your income, your assets, reviews your credit, and makes a determination based off of these things to say, okay, you're pre-approved for a certain amount of loan in order to purchase homes. So for example, I can pre-approve, depending on people's income and financial situation, I can pre-approve people for, let's say, up to $300,000, and then they know to start looking in that price range.
Just piggybacking off what Josh said there, you absolutely need to be pre-approved before you make an offer on a property, but in this market, the way things are moving so quickly, you need to be pre-approved before you even start looking as well. So looking at pre-approval in a little bit more depth, obviously it's going to involve looking at your assets, your income, it's going to involve looking at your credit, right? Does this impact your credit?
Yeah, short answer, yes. Whenever you make a mortgage inquiry we have to pull your credit and review your credit and everything. It affects it very minimally, so usually 5 points, 10 at the very most. Also something that a lot of people don't know, because a lot of people shop around for lenders and everything, and that makes sense, and I get that. But only the initial pull within a 30-day period will affect your credit score. So you can pull as many times as you want, but only the first pull will affect your credit score. And credit also is the way that credit, or the way that rates are determined, are in tiers of 20. So for example, 680 to 699 is one tier, 700 to 719 is another, 720 to 739 is another, and then anything over 740 is actually the highest, and you're considered a golden borrower and a very low credit risk.
Alright, so we've got our real estate professionals, we've got our real estate agent and our lender. We figured out our pre-approval. Now you need 20% down for a loan, don't you?
Well, no. There's a misconception out there that you do need 20% to put down on a home for a down payment, but the reality is you don't. I think that there's a misunderstanding there, because if you do put 20% down on a conventional loan, you avoid paying what's called PMI, or private mortgage insurance, okay? But you don't have to. There are loans that go as low as 3% down for a conventional, or 3.5% for an FHA. So you don't need 20% down, but what you do need to think about is two piles of cash when you're going to buy. So you want your down payment, which can be as low as 3%, but you also want to think about what are called closing costs. So we've got these two piles of cash: down payment, closing costs. And closing costs usually amount to around 2 or 3% of the purchase price. And so when you're going to buy a house, you're going to need the down payment, 3% on a conventional, but then you also need that 2 to 3% for your closing costs. And then those two things together is what's called cash to close, and that is the amount that you need to bring to the table when you're signing papers to close.
Just to pick up on those two piles of cash, you're going to need your down payment and your closing costs, but what we're seeing increasingly often in this market is the need for an additional down payment. So, I can't advise how people should structure their loans, but if you do put less down, then there's potential there that you free up more cash for an additional down payment to cover any sort of appraisal gap if it does occur. Okay, the next thing I want to touch on is a question that I don't hear, but should. During the home purchase process, how do I keep my loan on track? How do I make sure the closing goes smoothly and things like that? I'm thinking specifically about changes for income, applications for credit, and things like that.
Yeah, so as a general rule, what you want to think about is just keep all financial decisions just even keel. Don't make any major financial decisions while you're working through the loan process, while you're under contract on a home and you haven't closed yet. I actually have a video on my Instagram page, shameless plug, called The Don'ts and Don'ts of Purchasing a Home. And there are 4 don'ts. You don't make any large purchases. You don't make any large deposits, especially cash. You don't co-sign on any other loans. And you don't apply for any new credit. If you follow those rules, you should be good. But again, just suffice it to say, keep all your financial decisions even keel.
So if you've just bought a nice new home with a boat slip, wait till after you close to buy a boat.
Yeah. And also don't change jobs in the middle of it. I mean, you can, but it's just going to require more paperwork for yourself.
Okay.
Definitely don't buy a boat or an RV.
So, obviously I'm a real estate agent. I have some limited knowledge of loan products, but it's way beyond my expertise to answer some in-depth questions and weigh up the pros and cons of each of those. So Josh, I'd love to hear about some different loan products that are available to people, the pros and cons of each, so if you don't mind just going over that, that'd be awesome.
Yeah, absolutely. So, what I like to tell people initially is loan products are like any other product. Like if you go to the grocery store, there's lots of different bread products, right? You have sourdough, wheat, white, all these different bread products that you can choose from. And loans are very similar to that in that there are a bunch of different loan products. So let's get started.
All right.
The one that many people hear about, conventional loans, right? That's kind of like your standard. Those are generally seen as one of the really good loan products. You have to, qualify it with good credit and an income and everything. And there's FHA, which is a government-backed product. That's for people who have a little bit lower credit. It's not necessarily worse. There are some cons to it compared to a conventional loan, but you can always refinance out of it, and we'll get into that a little bit. And then you have your VA loan, which is for military professionals, and that is a 0% down loan. There is a funding fee on top of that, but that gets wrapped into the loan amount. So, and then you also have what are called renovation loans. Okay, and so these loans are the types where you can actually wrap the costs of improvements to a particular house that you're trying to buy into the loan amount. Okay, so for example, if there's a house that you find and it's kind of run down, then you can opt in to do a renovation loan. There's some additional steps in this, in that you need to get a contractor to do a bid on the place, and then we would determine the loan amount based off of what the contractor says in the bid that he gives or she gives. And so renovation loans are an option, and those are also both conventional and FHA. You can find renovation loans in both of those. And then you have first-time homebuyer products. Again, conventional, FHA. Okay, so you have conventional and FHA first-time homebuyer products. Lots of great products for that. Usually first-time homebuyers will get a little bit lower of a rate. There's a lower requirement of down payment to help people get into that first home. And then we have different terms for all of these loans. So we can get 15-year, you can get 20-year, you can get 25-year, you can get 30-year, and there are also actually 40-year terms on these loans. So there's so many different options out there, and knowing all of these options and knowing all of the loan products really helps you and sets you up for success to be able to build wealth for yourself. There's also a whole nother world called jumbo loans, which are above conforming limits, right? And so that's a whole nother ballgame, and I don't want to get too deep into that.
And that's honestly the benefit of talking to a lender, because your situation may not be the same as your buddy that just bought a property and got the particular loan product.
Right.
So yeah, absolutely reach out to a lender in conjunction with a real estate agent when you're starting. That's the value of real estate professionals for sure. Okay, that's it for this video. I hope you gained from this video. If you did, like and subscribe, that really helps me out. A huge thanks to Josh for providing the sort of lender side of things. I really appreciate that. You can find out a bit more about Josh in the description to this video below. But Josh, what's the best way for people to get a hold of you? Where are you most active?
Yeah, so top 2 ways: email, josht@prmg.net, and then Instagram, which is @joshloanadvisor.
As always, if you or anybody that you know is looking at buying a property here in Spokane, please reach out to me. I'd be honored to work with you. Until the next video, thanks for watching. The 2 people you're going to interact with most during a home purchase are your real estate agent and your lender.
You're going to try that again? Yeah. Okay.
Okay, ready?
I've been ready.
All right.
My part's been pretty tough so far.
So,
do I need to get pre-approved? Yes. Can I just say that?
Just go. Yes.
Yes.
No, what do you need to put down for a loan? You need
Wait,
20%.
I wasn't ready.
Okay, so.
I was like.
Okay, so we're looking at pre-approval.